What is an IPO and should you buy one? SpaceX just gave us one of the biggest IPO stories in market history. The company priced its IPO at $135 per share, raising roughly $75 billion and began trading Friday under the ticker SPCX. And SpaceX may not be the only major IPO people are watching. Anthropic has said it confidentially filed for a US IPO, and OpenAI has also reportedly moved in that direction. So, some of the most talked about private companies in the world may be getting closer to the public markets, which makes this a good time to answer a basic but important question. What actually is an IPO? IPO stands for Initial Public Offering. It is the first time a private company sells shares to the public on a stock exchange. Before an IPO, ownership is usually limited to founders, employee, venture capital firms, private investors. Regular investors generally cannot just log into a brokerage account and buy shares. After the IPO, they can. That is the simple definition. But here's the part people often miss. An IPO does not mean a company is automatically a good investment. It does not mean the stock is cheap. It does not mean early investors are handing the public a gift. It simply means a private company is now allowing public investors to participate. Companies go public for a number of reasons. Sometimes they want to raise money to expand, hire, build, or invest in future growth. But companies also go public because it creates liquidity. Founders, employees, and early investors may have spent years holding on to shares they could not easily sell. An IPO creates a public market where those shares can eventually be bought and sold. So, from the company's perspective, an IPO can be a milestone. From an early investor's perspective, it can be a payday. But from your perspective, as a public investor, it is a decision. And that decision should be based on more than excitement. Because IPOs create a lot of emotion. They feel exclusive and early. They feel like you are getting access to something everyone has been waiting for. And sometimes IPOs do become incredible long-term investments. Amazon, Google, and Meta all created enormous value after going public. But here's the important part. Investors did not have to buy every one of these companies on day one to participate in their long-term growth. In many cases, there were years after the IPO when disciplined investors could still buy great businesses. That matters because IPOs can create a false sense of urgency. People start thinking, if I do not buy this immediately, I will miss it. Maybe, but maybe not. Some IPOs surge right away, and some fall after the hype fades. Some are great companies, but poor investments at the wrong price, and some never live up to the story investors were sold. So, if you are thinking about buying an IPO, I would keep the questions simple. First, am I buying the business or am I buying the excitement? Those are not always the same thing. A company can be innovative, famous, and important while the stock is priced in a way that makes future returns harder. Second, what am I actually paying for? Valuation matters. A great company can still be a bad investment if the price already assumes everything goes right. Third, do I understand the risks? With IPOs, the first few days of trading can be driven by headlines, scarcity, momentum, and emotion. Prices can move fast, and regular investors may not always get access at the official IPO price. By the time the stock is available in the open market, it may already be trading much higher. That is not automatically bad, but it means the headline price and your price may not be the same thing. And finally, ask yourself this. If this stock dropped 30% after I bought it, would I still understand why I owned it? That one cuts through a lot of the hype because when a company like SpaceX goes public, I understand the excitement. It has rockets and satellites, Starlink, Elon Musk, government contracts, and a story that feels bigger than normal business. But excitement is not the same thing as an investment plan. The question is still, What am I buying? What am I paying? What could go wrong? And how does it fit into my overall portfolio? An IPO is not a guarantee or a recommendation. It is simply the day a private company invites the public to participate. And whether that opportunity makes sense depends on a lot more than the headline. That's it for this week. This is Jeannie, the 401k lady.